Welcome back. I am Karla Dennis, and today I'm talking about the 5 tax deductions that most people miss out on. These tax deductions can really help you keep more money in your pocket, which is what it's all about. But before we jump in, I want you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. One of the biggest tax deductions that I see taxpayers miss out on is the sales tax deduction. A lot of you probably don't even think about it, but when you are itemizing your deductions versus taking the standard, you may be able to deduct your sales tax, which may give you a higher deduction than just taking the normal state income tax deduction or property tax deduction, especially if you purchase something large and tangible during the year. For example, if you purchased a car, you probably have a large sales tax that you paid. Check out the contract and check it out so that you can get the sales tax deduction. The number 2 missed deduction is student loan interest. A lot of you are still paying on student loans. A lot of you are putting your children through college on loans. Make sure you capture your student loan interest that you are paying and get a deduction for that. School is costly enough. We don't want to pay twice by missing out on a nice big student loan interest deduction. The 3rd missed deduction is medical expenses. Most of us think that our medical expenses really do have to be a larger amount for us to deduct. And it does. It needs to exceed 7.5% of your income. But I'm telling you, with these co-pays and out-of-pocket prescriptions and things that we have to pay for, plus the insurance that we have to pay for, your medical expenses may be enough to get you a deduction. Check out the long-term care expense. If you're drawing Social Security, check out the Medicare payments that you're paying for, the dental bills, and all the medical expenses that you're paying for everybody else on your tax return, and see if you can get a nice deduction for those medical expenses. And remember, if you are self-employed, you want to make certain that you take the self-employed medical expense deduction. That's even a better write-off for you. But take advantage of the medical expense deduction. Number 4, the home office deduction. You used to be able to take the home office deduction as an itemized deduction if you worked at home on your federal income taxes, if you didn't have a business. If you do not have a business now, you cannot take it on the federal side of the equation, but you may be able to take it on the state side of the equation. Don't turn your back on the home office deduction, because this is a deduction that can really drive home a lower tax bill and give you more of a write-off. And you want to capture things like your utility bills, your security for your home. You want to capture things like your internet bills and any other expense that you pay purely for your home office. So make sure you get the home office deduction in there. And business owners, you definitely want to get that home office deduction in there, because a lot of you, I don't know one business owner, honestly, that does not use their home when they actually own a business. I don't care if you have an auto repair shop, you a plumber, I am sure you're doing some work at home. So make certain you take your home office deduction, and remember the 3 ways: the simplified method, the actual expenses based on square footage, and renting your home to your business. Educational expenses are a major deduction that a lot of you are forgetting about. Many of us are lifetime learners, and we need to get that educational expense in there. If you are attending college, you want to make certain you're taking advantage of the educational expenses. Some of these deductions, like the lifetime learning credit, the American Opportunity Credit, that will give you a credit up to $2,500. And you can even take a deduction many times. So you want to make certain that you are not just bypassing educational expenses, not just the tuition, but the books and the computers and the tutoring, all the other aids that you're utilizing to help you get through these courses. Look into it and get that educational deduction on your tax return. I also want to give you some bonus tips that you maybe have forgotten about. I want to go back to state taxes. Most of us think about taxes only on the federal level, but there are deductions that you can take on the state level in addition to the federal level. A lot of us are not deducting our investment fees. A lot of us are not deducting our tax preparation fees. A lot of us are not deducting our gambling losses. Remember, all the states did not conform to the federal rules. So do not miss out on your state tax deductions just because you can't deduct it on the federal side. On the federal side, you can still take the home office deduction if you work from home as a basic W-2 employee. So do not forget about that. In addition, a lot of you may be having casualty losses. We're hearing about perils every single day. If you are having perils like you've had equipment stolen, someone's broken into your car, broken into your house, you got into an accident, you have a loss, don't forget about those things. They're not as common, and you may not think about them when they come to tax purposes, but really take the time to aggregate all deductions so that you can get a good tax write-off and you can keep more money in your pocket. In addition to that, you also want to make sure you maintain excellent records. What do excellent records look like? You want to make sure that you have the method of payment, whether it was by check, credit card, Zelle, Venmo, or just by a transfer, and you want to keep the receipts for things. If you have a home office, take pictures of your home office. If you had a car accident, take pictures of the car accident. If you had a loss, some type of peril, get the information from your insurance company. Just keep those records in with a copy of your tax return. So just in case IRS ever comes knocking, you will always have the appropriate documentation in place. In conclusion, one of the things that I just kind of want to wrap up and make sure you guys are aware of, stop thinking for your tax preparer. A lot of you already think, I can't take this as a deduction, so you don't even aggregate all of your information. I want you to stop eliminating deductions before tax time. I want you to start tracking your mileage to and from the doctor. Start tracking your mileage to and from the dentist. Start tracking your mileage to charitable events, to church, to any type of volunteering that you do. Keep track of all of those things and let your tax professional tell you whether or not you qualify to take the deduction, so that you are not automatically eliminating your deduction because you think you don't qualify. Leave the thinking to the professionals and you just keep up with your records. And when you do that and you start to track your sales tax, you start to track your home office, you start to track your medical expenses, you start to track your educational expenses, you start to track your student loan expenses, you're gonna find that you're gonna have a lower overall tax bill, a larger refund, and you're gonna be able to keep more money in your pocket. And now that you know better, you absolutely have to do better. You gotta like, comment, and subscribe so you don't miss out on any of this wealth building information.